G'day everyone, welcome back to Pete's Investing. Today is April 7, 2023. This is a Euro US dollar price update. We've got the daily, the 4 hourly and the hourly charts, and we'll go through each of these individually, but overall you can see there's an upswing in all time frames. The CCI on its moving average is turned up on all of them, so that's a positive and a bullish signal on all of them. However, be wary, there is a key resistance area up here and it's broken through this descending trend line. We'll go through each chart. So on the daily, zooming out, you can see there has been this descending trend line drawn, and also this ascending trend line to form that wedge. Now it's actually broken through that descending trend line and heading towards this resistance area. So that's our key point. You'll notice also I drew this Fibonacci retracement and it came in, bounced just short of the 38% level, and it's making now further up moves from there. On the 4 hour chart, you can see more clearly the CCI moving average is still in an upswing, and I've drawn this smaller Fibonacci retracement and seeing where it's heading towards, and it's actually broken up through the 61% level, which is our key level of potential reversal. Now, if had it bounced down from there, that would have been a continuation of this downtrend, but instead it's broken through that 61% and now it's heading more into a more bullish momentum. So again, this is our next level of resistance, so we've got to be mindful of that. On the hourly, again, looking at it more closely, I'll explain what this channel is in a minute, so just ignore that for the moment, but you can see there we're still in this uptrend and following this level and breaking above this diagonal descending trend line. So in terms of trading ideas, I've got, if I insert fractals in there, first off, you can see there, as per the CCI and all three timelines, the daily, the 4 hourly and the hourly, they're all in bullish momentum, so we don't take short trades, we only take long trades. Whenever the fractals break, the candles break above the fractals, like in that example there, we would go long. In cases where it breaks the short, we don't take short positions, we only take long positions, again, when it's in the direction of the trend. So in this example, we go long, and exit criteria is I usually use a percentage gain. Now, one idea you can use is, that's where this channel comes in handy, going back in a bit of history, just draw a channel in some of the highs and lows and then measure that distance between that channel. In this case, it's a 0.8%, approximately a 0.8% difference between those two levels of the channel. So what I tend to do is halve that, put it in half, so that'll be 0.4%. So again, going back to our example, let's say it broke above the fractal there, we would, let's draw a ruler, and we entered at the top of that bar, say at the end of that, so we'd take a profit at about 4% gain. So you'd exit the trade around that point there. You could let it go to about 8%, and it would have closed there, but sometimes that's a bit ambitious. I like to be a bit more conservative in my trading, and I tend to take smaller profits where possible, just to be confirmed of more trades executing rather than less bigger trades. But it's up to you the way you want to exit your trade. You can use moving average crossovers. This is just another idea. I like using averages and probabilities on my analysis. So to understand how to properly trade using the average down approach, we don't use stop losses in case you get price going against you. How to use the average down approach, reference the links in the description below. Subscribe and like the channel, support us more on Patreon, and see you in a future video.